GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another weekly webinar. So we saw some massive moves in the Forex market last week. The euro hit a 19-month low, so a massive dive in euro dollar, big jump up in dollar yen, and big crashes in gold and silver because it was all just a big move up in the dollar. I think it was the strongest weekly move for the dollar in about 7 months. This all obviously in reaction to what was an expectedly hawkish Fed. And so now we're in the fallout. Actually, stock markets are well off their lows, a big hammer pattern in the S&P 500 and the Dow. So we'll talk about maybe the bottom's in stock markets, maybe the correction's over. They did all drop around 10% more or less. So potentially a bounce in stock markets, but it does look like a new uptrend opening up in the dollar and potentially new downtrends opening up in gold and silver. So I'll talk about all of that right now, but if there's anything else you'd like me to discuss, please just drop a comment in the video. Otherwise, just click that like button. We really appreciate that. So here's this bear flag pattern that we've been pointing out for a while. It's this consolidation that you can see very clearly on the weekly chart. We'd had that big leg lower, and we'd just been going sideways for a while, and it could have been a bottom, and we saw a bit of a attempted breakout there, but ultimately we've broken to the downside. We've made fresh lows, and obviously, yes, it's the lowest going back to June of 2020. So right in the aftermath of the onset of the pandemic. If we drop down to the daily chart, you can see our rising channel that we broke through pretty neatly here. You can see that we dropped down first to the support and then just, no signs of a bounce, closed at the lows, dropped again, and just consolidating a little bit over the last couple of days. But you can see this is very much a downtrending situation. We tried to break above the 50-day moving average. The 200, the 50 is well below the 200, which is way up there. It's just a downtrending scenario. Who knows? Maybe we do bottom out here, but there's certainly no indication of it at the moment. So if we're looking for opportunities, if the price can make its way back up to that last area of support, which is basically 112 that we'd broken through, that old support could act as resistance. I'm just not sure it can actually get that far. But if you are looking at the 112 level, that comes in a bit below it. So that seems feasible. A move up to 112, maybe not even quite to the bottom of the trading range, and then potentially rolling over again, or maybe it does make it up to that trading range. So we're looking at 112, then around 112.30 as potential resistance here. And if we can get through those levels, then we could see maybe a retest of the underside of the channel. But in essence, looking for rips in euro dollar to sell into because it's just such a clear downtrend. Moving on to the pound. Let's just have a look at our weekly charts a little bit cleaner. You can see we're in this kind of falling wedge pattern, which may eventually break to the top side, because remember the Bank of England have actually lifted interest rates, which is something the Fed have not done yet. The Fed have indicated that they'll lift US interest rates in March, but the Bank of England have already lifted interest rates once and are expected to do so again this week. So that's a bit of a positive force behind the pound, but obviously just what's generally happening to the dollar will affect the pound too. So the British pound is basically not making fresh lows like the euro is. It's actually well off the lows, and it's just testing this former resistance where we'd broken out and we came up to test that channel, that downtrend line, and we've dropped back to it. So definitely a downtrend. You can see these fractals, all lower lows, lower highs, but you can see that the fact that the most recent bounce was, we had obviously 4 weeks in a row of pound strength, is showing some strength in the market. So we could be setting up an eventual reversal to the top side, but again, for now, the trend is down. Now, if we do drop to this daily chart, you can see where we are. This is this last leg lower. That's the former kind of range where we'd broken out. We're coming back to test the top of that range, and we are getting rid of a bounce off there. And these are this is the kind of former low, which we bounced up and looked like we're getting through at the moment. And I would say if you could go down to this 4-hour chart, this is when this last bout of bearishness really kicked in. If we are going to get through these previous lows, which sort of seems like maybe we're going to, then maybe a move up to this supply zone up here, starting underneath that fractal high there. This could be an area which is where the moving averages seem to be converging as well, roughly in the 135 area, which is obviously a big round number as well. That potentially where sellers come in and start driving the pound lower again. Let's see what the Bank of England say this week. If they are particularly hawkish, maybe the pound can actually blow through these levels and start strengthening against the dollar. Okay, moving on to dollar yen. Obviously an inverse picture of these former two charts. The dollar moving higher here is testing the highs. What happened is, if you remember, we've kind of made some kind of grudging new highs, only just about new highs, but one of them was the highest in 7 years. And we dropped back from that for a couple of weeks, but now we've just put in this, doesn't really count because it's not at the end of a downtrend or anything. It's not technically a bullish engulfing pattern because it's not at the end of a downtrend, but it is an engulfing-like pattern. This last week did completely engulf the prior week, and it's testing the highest the highest close in 7 years, and just still a bit under the peak, but everything pointing to an uptrend. And you can see we've just put in a little shooting star kind of doji type pattern at that old former high there. You could say this was a bit of a kind of false breakout. We dropped back down, but we didn't get as far as the low. So higher low being put in. Now we're testing resistance. I would assume that we just continue to push to the top side. But if we're looking for opportunities, if we get down to this former high, it seems like we've bounced off it just before it once. So if we get down there again, I wouldn't be confident to buy because it's already had basically one opportunity to bounce from it. But if we drop down again, this is where that last bout of strength came in, a bit of a kind of equivalent level to that euro level. If we can get some dollar weakness down as far as that's about 114.80 to maybe 75, something in that vicinity, which is actually just where this 200-day moving average is, that would line up quite neatly for a potential buy the dip opportunity. Let's move to gold, and it's not so clear when you first look at this chart here, but if I just show you the monthly chart, this is actually potentially what we're dealing with here, a downsloping channel, which actually if you ignore the spike high there, downsloping channel where we've just had the 6th test of this downsloping channel, and we just put in a big bearish week, not yet a bearish month, but I think it could end up being a kind of inside month, but then who knows what happens the following month. We're on the last day of January now, so it would have to be a really bad day on Monday for this to end up being a kind of bearish pattern and close through these lows just on Monday. But potentially what we're dealing with here is this is the parallel channel, which actually there's the low, and there is the flash crash low. And so if we are going to break below this rising trend line, connecting the lows and through this support that's been supporting gold for ages, which is 1750 basically, if we get below 1750, it seems like we're probably going to test the bottom of this channel down here, which would be about 1600. So we're potentially looking at a 200-point drop coming up in gold. If it's just going to, it's not really completely unwinding the overall, long-term bullish trend, but it's just taking the correction a bit deeper and somewhere close to this 50-month moving average. So potentially that's what we're dealing with. Here you can see on the weekly chart, we've basically got our resistance through here about 1830, failed at that trend line once, failed at that trend line again with a bearish engulfing pattern, engulfed the previous It's engulfed a number of weeks actually, 1, 2, 3, 4, 5. So this is quite a strong pattern. And I would suggest that maybe the opportunities are to be found if we get a bounce back up to that broken low and these moving averages. It probably wouldn't take much more than that. That's just, 1800 is the round number, maybe a bit above it, going as far as 1810, up to these lows through here. That would maybe be just about enough of a retracement to be able to, buy at slightly higher prices. But this is a very negative pattern here, and I think it's opening up much lower prices in gold. So we're basically looking for some sort of retracement into this bearish engulfing pattern to potentially set up the next leg down to test this rising trend line and the support down at 1750, and then potentially move lower. So as you might imagine, a similar situation in silver. We've also got a downsloping trend line connecting the three most recent major peaks, and a big bearish engulfing that took silver right down into this rising trend line here, sitting right on it, opening up below it, and still not really making any progress above the 50 RSI, showing that we're still in pretty much downtrend territory and have been since June. And again, potentially a break below this little rising trend line here, coming back down to 22, which is the major kind of support that has been in place since late 2020. And then if that happens, if we look at our monthly chart here, we can go back to these peaks that was capping the silver market at around 18 for a few years. Potentially we get right back down to 18 before we find any kind of support and any chance of turning around this kind of negative trend. For the moment, you can see it's just flat, and while we hold 22, it's still a flat market, but it's just falling away from this downsloping trend line again. Especially if it's confirmed with a breakthrough, the trend line's moved slightly on the daily chart. At the moment, we're getting a bit of a bounce off here, so potentially an opportunity here, at least in the short term, get a bounce off this trend line. But I'm just suggesting to you that same with gold, that was a big negative, bearish engulfing week. If we can retrace a bit into the week and get a higher price, that might be all we need in terms of selling the rib. And so something like, I'm trying to kind of find the right tool. This is something I'd had drawn in before. That's the previous peaks there. You can see it was a little bit affected there. That's where we saw a big drop. So we'd sort of been drop, and then big drop. So maybe where that big drop started, which is just under 23.50, that could be an interesting area. If we're able to bounce up there, maybe that's where sellers come back in. All right, moving over to the oil market, it's still looking pretty positive overall. You can see that we've had two weekly closes above the previous multi-year high, and so we're stalling a little bit around 90, but we've had 1, 2, 3, 4, 5, 6 positive weeks in a row now. So attempting our 7th positive week, which is tricky to do, but you can see actually there's been some recent form of oil being able to do that. The overall pattern is this rising wedge pattern, which could ultimately be bearish, and it's kind of interesting that the top of the wedge does come in. Remember, we're talking about WTI here, so it's a little bit less than Brent. If you're looking at Brent, actually the top of a kind of similar looking wedge comes in around 100. For WTI, it's more like 95. But maybe we can get up to the top of this wedge, and you can see the RSI divergence is very clear. We're making lower highs on RSI while making higher highs in the price. So maybe this fourth peak will be the one where the price actually can drop away and maybe drop finally below this bottom rising trend line. That's all a bit speculative for now. For now, the trend is very much up, and we're just stalling a little bit at this previous high. Maybe we're consolidating a bit around the previous peaks, and so maybe we get a drop back to 80 or 81 again before lifting up. But overall, bullish trend still in place, but just eyeing that that rising trend line up there. If we get the next leg up and then see some kind of bearish pattern on the daily chart, it might be the first sign that this big weekly pattern is starting to happen. Okay, moving on to the stock market. This is the massive hammer pattern that I was talking about on a weekly basis. It was Apple earnings on Friday, which came in ahead of expectations, which they seemingly always do, and so bounced well off this. We'd flagged this kind of pivot area, the support, also the previous resistance as an area of interest, and you can see that we tested it neatly right on this low here and bounced right back up and closed above the 50-week moving average, which was technically significant. The other technically significant moving average that everyone's watching is the 200-day moving average. And you can see that is literally what we're just trying to test at the moment. Now, this is an interesting pattern. It's two matching lows and a higher close. That's generally a bullish pattern. It's not a particularly higher close. I mean, it's a higher close than this previous open and close, but it's not much higher than the previous high. So, but nonetheless, these two by themselves with long legs there, two matching lows and a higher close, normally a bullish pattern. And I suspect that this fractal does get taken out, and that's why I've drawn these Fibbo levels on, because these are the important previous lows. This low here, and then this low here. These are the support levels got taken out viciously the week before last, and so I think they could be the resistance. Probably not this first one. If we are able to break out of this current range, that wouldn't be particularly far. But you can see there is a 50% retracement here, which matches this low pretty neatly. So there's a kind of confluence of support coming in there. And then equally, the 61.8% retracement and this low, there's a confluence of resistance there. So either the 50 or the 61.8 combined with these previous areas of support could be a confluence of resistance. So again, had the big leg lower, and they could be levels to sell into. For the time being, it looks like, based on this big weekly bullish pattern, that the price is heading higher. So short term, yes, you want to be looking for the price pushing to the top side. Oh, I think this hasn't, what am I looking at here? Oh yeah, no, that's good, that's good. So you can see our range on the 4-hour chart. We're looking for a breakout of the range. It's got through the high there, but you can see like through the closes. We're looking for a breakout here, and then, looking for higher prices up towards the 50, then the 61.8. So short term, we're above this 4-hour moving average. We want to see some price action to the top side, and potentially these levels up here to turn the other direction, and maybe some sellers come back into the market. And just the overall point I wanted to draw it in is that maybe this uptrend still is intact. We've had a 4 week sell-off and a bounce off the lows on the 4th week. A month of selling, that doesn't happen very often in this bull market, and on the previous occasions, that's been a good time to buy. But what's slightly different this time is just look at this rising trend line that's been in place since April 2020, connecting all these lows, and we've dropped through it. So that's the thing, is that the rate of change of the uptrend has slowed down significantly. So that might just mean we've gone into a sideways range for a while and consolidate before we break out again. But it could mean that another leg lower is coming as well, because this is a definite change of pace. It's not just an immediate, obvious buy the dip while above that rising trend line that the previous occasions have been. This one looking a bit more dubious. And last but not least, Bitcoin. Actually, before I get to Bitcoin, I did want to sort of show that was also interesting. This is the Wall Street 30, the Dow Jones proxy, and you can see the same hammer pattern there. And interestingly, the rising channel just about holding in place in terms of a closing level, and you can see it was just this support down here that held pretty neatly where the price bounced off. So short term, after these strong hammer patterns, you'd imagine these indices are going to be retracing some of these drops. It looks bullish in the short term. And the Dow overall looks a bit more positive than the S&P, which has broken that long-term trend line. Okay, and let's just pull up that Bitcoin chart. This is the weekly one, and you can see we finished positively, just like stocks rebounded off the lows. Bitcoin also rebounded off the lows. Not a particularly strong week, but still a nice little long wick, and you can see that it filled this gap here. So this gap that we had back in July, it dropped, filled the gap, and then rebounded up and closed the week higher, and still under 40,000. I think, or if I drop down to these lower time frames a bit, just as daily here, this is 45,000, which is these lows here, and then this peak here is a bit above 44,000. So that 44 to 45,000 range, for me, I'm not going to put so much weight on a break back above 38 or even 40,000 would obviously be psychologically important. But I think really you need to get back above these lows and these highs here at 44 to 45,000. And the moving averages are just above on a daily chart. Need to see a big move up through there and then wait for the pullback, I think, to have any hope that this downtrend has changed. It is due, so that's possible, that move back up through those levels. But I wouldn't be trying to... I wouldn't necessarily be trying to call the low just yet, because I don't think the evidence is in that there is one. All right, that's it for this week. Thanks very much for tuning in. Make sure to subscribe to the channel so you don't miss when the same video comes out at the same time next week. Thanks, everyone.